Hello traders, the title of the video is Fearless Elliott Wave Analysis, Facebook and Wave Counts Techniques. Alright, so we are recording this video today because a YouTuber of the name Chioni did ask me to record, to analyze the Facebook stock. All right, he did put it in a comment section. That's why we are recording this video today, because I say to traders, if you want us to talk about a particular stock or a particular stock indices, you need to put it in a comment section, and in due course I will be recording a video about that particular stock or indices. But remember that I only have a data for American stock, talking about NASDAQ 100 components, Dow 30 components, S&P 500 component, and the major American indices. So if you want me to analyze one particular of those, please put in the comment section as this gentleman is doing. So if I like it, I will record a video about that particular instrument. All right, so let's get started. Fearless Elliott Wave Analysis, Facebook and Wave Count Techniques. So what I usually do, I go to the yearly chart, because if you go to the yearly chart, I'm using TC2000 charting software. You can quickly see what is going on. You have the bigger picture. All right, so the bigger picture, looking at this, is the price is in a rising channel. All right, so there is an impulse wave underway. All right, so any impulse wave can be subdivided into a 5-manner way. So we will try to find out whether it is possible to identify or to isolate each internal wave. All right, sometimes it's very easy, sometimes it's very difficult, sometimes it's not even possible to see the internal wave. All right, again, on the yearly chart, I try to see the last candlestick bar here, and one of the things that you need to be aware of is that if that candlestick bar is not yet closed, you need to put a question mark on it, because that candlestick bar, this one here, is not yet closed. But what I can start thinking of, I'm choosing my word carefully, what I can start thinking of or deducting is that probably a corrective wave is already underway somewhere here, because the price, you can see, went up nicely. Now on top of it, we have this shadow here. Though the candlestick bar is not yet closed, I'm allowed to start thinking that probably a corrective wave is underway. We'll find out soon. But I also, on the yearly chart, I placed my stochastic 833. As you can see, it's not visible on the yearly chart now, but it also helped me on the yearly chart to identify the Elliott waves. All right, but now I cannot see it. So what do? I drop down one time frame down. I'll go to the quarterly chart, and here it is, you see. So that's all I have for the stochastic. You can see that the stochastic is to stay overbought for a long time, and what we can deduct from that is that probably this move that is in play here is an impulse wave, is a multi-wave. This move is a trending phase. There's a trend in place. Either it's the first wave, whether it's the third wave, whether it's the fifth wave, or it's the multi-wave of an Elliott wave cycle. That's why the stochastic stay overbought for like this. Now, because I don't want the video to be too long, I will not go to the monthly chart. I'll go to the weekly chart instead. Let's see. All right. Okay, it's a bit messy here. So, because we want to see the internal wave, I'll go to the monthly chart. Okay, now here. So on the monthly chart, you can see that again. Here it is. You see this stochastic display a double top. You see here, this section here, and the price display a higher high. This is what we call a false bearish divergence in an uptrend, or we will see a false bullish divergence in a downtrend during the first wave. But when I'm using the word false, it doesn't mean that one cannot sell for a short term, but it is a temporary divergence. You will see that during the first wave, it's a temporary divergence. So the third wave is about to start. we will see a temporary divergence or a forward divergence. We do not want to take part into it. Or if you want to take part into that divergence trading, you want to be very, very careful because a bigger move is underway. It's time to start taking out your wallet to buy and hold if the fundamentals are solid and the market environment is good, aligning with the S&P 500 itself. That would be a better decision. So this is a good, that is my first wave. I see my temporary divergence, which is confirmed. So from, you can see this is my first wave for, I've done it before. You see here, it's subdivided into 5 minus 1, 2, 3, 4, 5. All right. No area wave violation. There is a second wave, also very swift. So if the second wave is very swift like this, you know that the third wave will be prolonged, meaning that you go above the 161.8% Fibonacci extension level of the first wave. Here it is. This is the third wave of a higher degree for Facebook, because Facebook was listed somewhere in 2012. Is it correct? Check it out, Google it, and correct me in the comment section. And I was here that time. I lost some money. I lost some money here when it came to the market because I was expecting it to go up. They take me out before it went up. All right. So but it's okay. All right. So it went up. All right. All right. I lost like almost 700 British pounds that time. I remember that trade very well here. All right. It was a messy one. All right. Very messy because there was some market manipulation here, which I disagree. Some people try to buy it because I'm a technical trader. So some people try to buy it low. Yeah. So they push it down fast. You can see here. So where it was here, instead of going up straight away, they push it down fast, and then they bring it up because it's due to go up. The future was brighter, but somebody want to buy it low. They take us out of the trade fast because they push it before they push it up. It's normal, or I'm not complaining. So the next thing that we can say on this monthly chart is that you can see that the stochastic is still overbought. For a long time, it tried to go down a little bit here, but this is good here because you see, after the second wave, the third wave is underway, the stochastic pulled back nicely. All right, pull back a bit before going back up. All right, this is a nice move, nice, friendly stochastic here. Okay. It's just, you will know that the third wave is not yet finished, probably, or the third wave is being subdivided into 5 minor wave. All right, so he pulled back nicely before going up this section here between April 2014 up to October 2016. That's the third wave for a Facebook stock. All right, and followed by a swift, very swift, okay, for 3 months. Have the fourth wave of a higher degree. You see here the stochastic finally pulled back nicely. You see here, this is the fourth wave. So the stochastic will stay overbought for a long time during the third wave, and then it will come back down like this, and then go up again to form the fifth wave, will stay overbought again. So every impulse move, the stochastic will stay overbought. So don't sell when the stochastic is overbought. Look for breakable, retest, turn around, or when the stochastic is oversold during an impulse wave in a downtrend, look for break below, retest, turn around. All right, so here it is. So then we have the third wave, fourth wave, stochastic pull back, and then the fifth wave. Look at how the stochastic 833 is doing a very good job to help us with our wave count. And now here it is a fourth wave. This is a distinctive stochastic behavior that we usually see during a multi-wave. This is a clean cut. And this is a good one here, this one. See this one here? And you put this, when you see something like, see this one? How it came down, all right? And then you did something like that. You know that the corrective wave is underway. All right? All right? All right? I will not talk too much about this because there are things that I don't want to talk about in a public place. All right? But just remember that, okay? So we have the fourth wave and the fifth wave right here. The Facebook stock is now in a corrective wave right now. It's in a corrective wave. All right? And what kind of corrective wave we should think of? That one you will see if you drop down one more time, you will see the internal wave as I did before. So we say first wave of a higher degree, second wave of a higher degree, third wave of a higher degree, fourth wave of a higher degree, fifth wave of a higher degree. So at this junction, remember my friend, at this junction, what do? Put a vertical line there. So if we say 1, 2, 3, 4, 5, it becomes 1. So though we are saying a higher degree, we can still put here 1. All right? For the next higher degree, for the next higher degree. Are you with me? For the next higher degree. So 1, 2, 3, 4, 5. Okay, it becomes now 1. I'll color that into black. So it's cool. So I'll leave it on my chart like this. All right, so that's it. All right. Okay. So a corrective way is underway. You see here, you see it now 1, 2, 3. So we are thinking of what? A flat correction. This is an expanded flat correction that is taking place here. If you look carefully here, if you apply a Fibonacci extension to the 5th wave, a conservative one, because if you put it, because you see I put it on the closing price instead of the high, because if you put it on the high, that's what I say to you, when we are applying Fibonacci extension or Fibonacci retracement, you need to go into the mind of other traders. So one group of traders will put it at the top like this, so their 138.2% will be here, so you want to know where that 138.2% Fibonacci extension is now, is here. It's just one exercise, a mind game in the financial market. All right? And then other traders will put it at the closing price, and that's exactly where we are now. That's where the people did sell it. So what usually takes place, you see the area wave expert, the area wave technical trader, they can 1, 2, 3, 4, 5. You say, well, and then you keep down 1, 2, 3. Then you start pushing out. It breaks above this high. You see here, you need to understand that. As it goes above this high here, okay, because it's a clear-cut neat move, you see here, 1, 2, 3. As it breaks above, you see it breaks above this high, retest it a bit here, and then continue. As it breaks above this high, hedge fund managers will place orders above 138.2% of as a higher, the green one, and here there will be orders here to sell. Definitely, there will be orders there to sell. In a downtrend, there will be orders there to buy. All right. So you want to know where are the orders and monitor the reaction of the price at that point. So as the price manage to push it there and it hit that level, orders feel push down. Now, usually, sometime, all right, orders are already there, but again, there will be some bad news or something, all right, some news to support the sell. Don't ask me why. This is what we usually see in the financial market, all right. So this is it. So here, there was some bad news for Facebook stock. They were ordered there to sell. Those are technical reasons. It's a pattern. 1, 2, 3, 4, 5. Okay, 1, 1, 2, 3. It goes to 138.2% level. That's what I say to you. If you are using Fibonacci and you don't understand, all right, the 138.2% Fibonacci extension level, you do not know Fibonacci yet. It's a critical resistance level, and you need to go to www.dayprotrader.com, click on 138.2% Fibonacci extension level. It's a market stable data. After a price breaks above the prior high, the next resistance is 138.2% Fibonacci extension level of the prior trend of the prior impulse wave. All right, this is it. Boom, down. So what are we expecting now? So 1, 2, 3, that's the A. Manual wave of the flat correction. This is the B. From here, B, manual wave of the flat correction. We are now in the phi. We are now in the C. C for Charlie, not a phi. C for Charlie. Corrective wave. C, manual wave of the flat correction. So we'll be expecting 1, 2, 3, 4, 5 wave down. Again, you see how this one came down very fast. You need to be careful. Sometimes instead of seeing expecting, all right, so you'll be saying, all right, this is 1, 2, and probably go to 5. It may not do that because you see how it came down very fast. Sure, a distortion. All right. So we are now in the C wave of the flat correction. All right. Okay. So how do you forecast the C manual wave of the flat correction? I will not talk about it again. all I will say to you, check out our playlist about the flag correction or the video about how to forecast the C-minor wave of the flag correction. Please do not ask me because I have to do exactly what you is supposed to do yourself. Check that video about the flag correction, how we forecast this flag correction. So a simpler way, all right? A simple way to handle this, because we know that there is a correction in that way. How do we handle it? How do you avoid trading mistake at this junction? You are an Elliott trader. You are expecting something. You are reading the price. You are translating the language of the price clearly. Now, you have an edge, okay? But you do not want to lose. How you avoid losing? You use the market geometry. This is what I did here. You see how I project all the channel ready here? You see here? So how, you see, the chart, the original channel, you see, that's the trend was here, we push it down. You see, it went above it. As it's coming down, it retests the lower part of that channel. Now, as it starts going out, we project the width, the same channel, look at that. Here it is. And again, was it helpful again here? Again, on the edge, all the 138.2%, and that trend line, the intersection zone is a hotspot trading zone, push down. So if you sell there, your target will be on the edge of this channel here. Now it's going down. You see, it came down to the next one again here. So one line that you will draw down because you are expecting something, you just want to breathe in, that you don't end up losing. A trader will become very, very emotional if he or she was expecting the price to go up, but he ended up losing before the price continued to go up. This is what's happened to me. When Facebook came here, it was a bit emotional trade. I lost almost 700 British pounds here. I know that this stock should go up. I used the wrong instrument. What I should have done is to buy and hold that point in time, but I was using spread betting, so I lost 700 pounds because of that. If I did buy and hold, I used the correct instrument at that point in time, I would not have wasted my hard-earned money at that point in time, and I would have been laughing nicely. Okay, you see now? Okay, now this is what we are saying. So as an Elliott trader, you forecast the market, you're expecting something, okay? You've done everything correctly, but now you put your, this is what we are saying, the market pattern precede, okay, the wave pattern. They are more important than the Elliott wave pattern. So once we finish with our Elliott wave forecast, which we have already done, all right, now we switch to the nitty-gritty of technical trading, meaning that analyzing the price action and trading on the edge. So here you see I have the media line for that channel. All right, that's all you need to do now. That's all you need to do now. Stay focused and use the correct instrument so you don't end up losing. That's all. Is it call option? Is it put option you should use? All right, whichever. Okay. So you don't end up giving money away, though you know exactly or you expect you get it right. All right, so this is it. So this is that orange channel. All right. All right, that orange channel, the green line is the median line. It breaks below, it retests it now on the edge. That's what's happening here. If you implement top down to the middle, all right, it breaks it below it. All right. So if it's coming down, all right, again, apart from the channel, where are the normal horizontal key level? There's one here. I don't want to draw it now. You see there's one here. There's one there at 15144. It's a support level. If it's very below this orange, watch those levels. And then there's another one here. Key level 13355. All right. That's it. That's it. So, generally speaking, Elliott wave traders, all right, what are we going to do now? I'm going to move Elliott wave traders will now apply. Okay, you see how where the trend is started. Okay, so because a multi-way is completed and a correction is underway again here, I'll put it at the closing price instead of the top of that candlestick bar. So from the beginning of that multi-way, so they will now, a corrective way is underway. It's a flat correction. It's an expanded flat correction. 1, 2, 3, 1, 2, 3. Expectation of 1, 2, 3, 4, 5. There is a distortion here. It may not show a clear cut 1, 2, 3, 4, 5 down, but something that people will always do, Fibonacci traders, investor will do. They will highlight which level. That's what we're doing all the time. Have you forgotten? All right. The sweet spot zone, the zone between the 50% and the 61.8% Fibonacci retracement level, that's the level where most professional traders will be expecting the correction to end. Doesn't mean that the correction will definitely come there, but definitely they will have that zone highlighted on their chart because there will be other space there to buy. Doesn't mean that a new trend will begin from there. It doesn't mean that the price cannot go below the sweet spot zone. That's the sweet spot zone, the green spot zone, the zone between the 50%, the 61.8% Fibonacci retracement of the whole multi-wave, first wave, second wave, third wave, fourth wave, and the fifth wave. Here it is. Right. Will it come there? So we have different type of a flat correction because you see that it's a strong bullish move. All right. So minimum, you will say 38.2% level. Bringing Facebook in the zone of $124 zone, or it may turn around before that. But just play with the price. Draw the line, project the channel, know the key level, highlight the sweet spot zone, there's 138.2% level, and trade on the edge using what we call break below, retest, turn around, all right? And trade on the edge, implement a top-down trading method. I think I've said enough already, all right, talking about fearless Elliott wave analysis, first book, wave counts, techniques, all right? So you may wonder why George is a fearless, but the reason why I say fearless because as I mentioned to that trader in the comment section, there are some stocks that I stay away from. Not that I'm afraid of trading them or analyzing them. I try to avoid recording video about those stocks because it's just about wisdom. I want to go to bed peacefully. I don't want. All right, if you understand it. So that's why sometimes traders do not understand. We YouTube creators, we do first other issues, all right? And we try to be careful. You don't want to go around asking for trouble or giving yourself too much hard time, all right? You don't want that. You want to live a happy life, a peaceful life without bothering too many people. So for those reasons, sometimes I try to avoid reanalyzing some stock. And Facebook is one of them. Now that a trader did ask me to do it, all right, I've done it now, but I will not put it, all right, on my Facebook page. I will not, all right. I will not analyze Facebook, telling people that this stock is more likely to go down, and then I'll go and post it on Facebook. I won't do that, all right? I will not do that. So this will conclude. That's why I use the word fearless, all right, Elliott wave analysis, okay? So I would like to take this opportunity to thank Chioni. Chioni was the person who asked asked us to record a video about Facebook. All right. So as I said, if other traders do find other stocks, American stock indices, they wanted to look at it. As a lady Rosie also asked me last time to analyze NASDAQ 100. I did that already now, Facebook. So put in the comment section, and in due course, we will be analyzing American stock that our YouTube subscribers want us to talk about. That's what we're going to do this year. If it's working, we may record other tutorial about other instrument, but this is what we want to try now and see, okay, what will happen, all right? If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So this will conclude our discussion today about fearless Elliott wave analysis, Facebook, and wave count techniques. If you have not yet subscribed to our channel, please subscribe to our channel. Click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about a fearless Elliott wave analysis, first book, and wave count technique. Happy trading to you all, and I will speak to you soon. Thank you for watching.